What's up everyone, it's Scotty with Money Vesting. So in this video we are going to be talking about a brand new growth stock. It's not really brand new per se, but we have talked about it very briefly in our previous videos, but they are going to be reporting earnings later this week. So I wanted to bring it to your attention because the most important thing is that they are on the verge of turning the corner towards profitability. And that's what I'm really excited about, right? For companies that are actually going to be sustainable long term, they can actually achieve profitability and be around for a long time, right? So this company is basically a cloud service provider, very, very high margins, SaaS business model. So as always, if you enjoyed this video and find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The first week of the month is here, so I highly encourage you guys to check out the Patreon, Discord link down below if you're interested in joining us, getting access to all the buy and sell alerts, options alerts, trade ideas, everything's going to be included, as well as the members only private videos and the intrinsic value spreadsheet where we are keeping track of a lot of the stocks that we like, and also we are keeping track of their fair value so that the buy targets, as soon as they come down to those levels, we will be alerted so we can take advantage of those deals. So links are going to be down below. The company that we are talking about today is going to be Cloudflare, ticker symbol NET. It is a global network provider for various services that make websites faster, more secure, more reliable, more efficient. So these right here are some of the services that they include. So content delivery network, CDN, we got DDoS protection, we got web application firewall, SSL, TLS certificates, and DNS services as well. So a lot of these things, of course, are going way over my head, but from what I understand, again, they are a service provider for websites and online platform and marketplaces, making them more secure, more reliable, like I said, and of course offering some level of cybersecurity, so to speak, right? Not pure cybersecurity play, but definitely does offer a SaaS business model for a lot of these companies and these businesses. So obviously the growth has been very strong, right? The reason why I consider Cloudflare to be a growth stock is because of the consistent increase in revenues from 84.5 million to over almost $1 billion, right? So that's over a 10x growth in the last 6 years, right? Let me repeat, over 1,000% growth in the last 6 years for revenues, for gross profits, going from 61 million to 742 million. That's over 12 times growth in the last 6 years. But just as fast as the revenue and gross profits are growing, is just as fast the operating expenses and operating losses are growing, right? So if you take a look at the R&D expense, it's also 10x. It's gone from 23.7 million to $298 million, and SG&A has gone from 54 million to 641 million. So total operating expenses has also grown by 10 to 11x. It's gone from like 78 million to over 940 million dollars. So right now what the company has is more in expenses than the revenue they're bringing in, and as a result the operating expenses of course are more, so operating losses are negative, right? So negative 197, negative $200 million is the operating loss for the company. Shares outstanding has stabilized a little bit since 2020. They've gone from like 300 million to 328 million. So it's a little bit more flatlined in the last 4 years. But of course, since 2016, it's been crazy. And EBITDA also is negative. Free cash flow is negative. So that's one of the reasons why, I like to stay away from companies like these, is because there is no path to profitability yet. The moment they become profitable is the moment things change, right? It is very difficult, right? It's very difficult. Ask any business owner, right? Any company who's actually running, for the first time. Let's say it's a startup. Let's say that you are a business owner. Ask any business owner, ask any company owner how difficult it is to achieve profitability. And they will tell you it is not a walk in the park. If companies could be profitable fairly quickly, every company would be doing it. There would be companies starting almost every day. But the fact that it's so difficult is the sole reason why I get a little bit more excited when I look at a company that it's already profitable, it's already growing, and it's consistent with the way they do business. So with Cloudflare, it's huge potential, but the big question mark and the uncertainty around it is whether it can be profitable. And that's exactly one of the reasons why I will be using a much higher margin of safety for something like Cloudflare versus something like Apple or something like Fortinet, right? Because it's already profitable, but Cloudflare isn't. So I will be using a much higher margin of safety in my analysis. Now, when it comes to the margins, again, they've got excellent margins on a gross basis, 75%, but everything else is negative for obvious reasons. And we've got balance sheet that is also very strong, so $1.72 billion of cash with $1.58 billion of debt, so they have a negative net debt. So that's very good, right? That's a plus point For Cloudflare, they've got 4.4 current ratio, 4.2 quick ratio. Debt to free cash flow we can kind of ignore because the company does have more cash than debt on the balance sheet. Now this right here is the path to profitability, right? Analysts do expect Cloudflare to put up 34 cents per share in EPS, then 42 cents, 61 cents, $1.16, $1.80, $2.65, and so on and so forth. And that growth right there is going to be a little bit over 40 to 50%. So I plug it into my spreadsheet. We get a growth rate of just over 40 to 50% for Cloudflare over the next 5 to 10 years. So that is, again, a very, very significant growth rate, right? That's why I consider Cloudflare to be a growth stock. But again, the question is, can they do it, right? These are estimates. At the end of the day, these are only forecasts. They're just as good as yours or mine. But the question, again, is can they execute and become profitable? Now, they are going to be reporting earnings later this week. So let me just go over the quick estimates here from analysts. They are expected to report an EPS of about 7 cents per share, 7.5 cents per share, and revenues of just over $305 million. So again, we're already starting to see a little bit of that profitability come in for Cloudflare. And this right here is going to be the valuation, which obviously is super high. Price to sales at 17 times sales. Can you believe that? That's crazy. And then price to cash flow at over 192. Price to earnings obviously at 203 on a non-GAAP basis. So valuations are very, very expensive for this growth stock, to say the least. So once we plug in these numbers for NET, I'm going to go with about 4.5% share dilution. Like I said, I'm going to go with at least 20 to 30% margin of safety. Let's start with 20, 12% discount rate. I can even go with a higher discount rate because I want to be compensated a higher rate of return for the risk that I'm taking on with an unprofitable company. But it's really just, an analyst's choice. Like it's really up to you if you want to go with a higher discount rate. But I think 12% discount rate is fair enough because that margin of safety is really going to bring our overall return to well over 14-15% per year anyway. Growth rate, I'm not going to go with 50. I'm not going to go with 40. I'm going to go with, let's say, 30% growth rate. And I'm going to give it a 30-35 times multiple. Let's just do 35. And we end up with a fair value. Wow, that's absolutely crazy. It's trading at $67. Man, I feel like it's not even worth analyzing Cloudflare right now until they actually become profitable. If you do with 40%, 40, we get a fair value up to $30. Okay, that's actually not bad, right? So 50% decline. I know the comments that I'm gonna get in this video, but yeah, this is where we are, right? A little bit under $30 with a 40% growth rate, 40 times P multiple. If you go with our usual 10% margin of safety, then maybe we can bump that number up to 33.50. But, that's just asking for trouble in my opinion. So 20%, I'm comfortable with that. 40% growth rate is a little bit too much, but I'm willing to let that slide just considering the price. Even after those estimates, the price obviously is going to be far lower than where it's trading at the moment. So sub 30, that means we're looking for, like $39, $40, very strong support here. Incredible demand. It's bounced off at that level not once, twice, but 3 times. Actually 4 times. So this right here is second time. This is third. And this right here is the 4th time it actually bounced off at that level. So next time Cloudflare is sub 40, it's a swing trade. Next time Cloudflare is sub 30, it's a potential investment. So those are some levels that I'm really going to be watching. But right now we've got a huge resistance at $70, $71 for Cloudflare. And the moment it breaks above that level, it could be on its way back higher to potentially getting up to $95, $96. But those are just crazy numbers out there, right? I mean, it would be trading at significantly higher price sales multiple, price earnings multiple. So yeah, that's where we are with Cloudflare. It's again, like I said, it's a quality company, great company, lots of potential to unlock, but the execution is going to be the main question mark there. And for me, like I said, sub 40, $39, $30 is going to be a great swing trading opportunity, and sub 30 is going to be a fantastic long-term investing potential. Again, potential with the keyword there because of execution risk with the company as well. So I hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, link to our Discord and Patreon is going to be down below. Don't forget, first week of the month, best time to join. You get access to all the benefits, all the members only videos, private alerts, everything. Link's going to be down below as always. Happy investing. I'll see you all in the next video.